trading bell, my heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears. hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now.
Okay. I think I'm live. Let me just make sure you can hear me. I gotta turn my own sound on. I think you can hear me. I think so. You'll see me decked out in a hat and a shirt. Yeah, you can hear me. This is Trendspider gear. We've got official Trendspider gear. So I'm gonna zoom out a little bit. Let's see. Can I zoom out? I guess I can't. Oh, I gotta, hold on. It's not, oh, it auto zooms. Son of a bitch. It's automatically tracking. Single tap tracking. It automatically tracks me. And no, I'm sorry. What I will do, you can't rewind the live. You have to watch me live. You can't rewind it. My apologies. I'm gonna get it fixed. I'm grumpy as F because I haven't been sleeping because of the damn whitening trays. And today is the day I go to the dentist and she does the final whitening. So, if anybody wants the tooth Architect, Sandy Springs. That's my dentist. Okay, we can go here to the website. She's an architect. She's awesome. I think my crap is going to be up here on here at some point in time. She's awesome, just awesome. I need to write a review. By interacting with this chatbot, you agree and accept our privacy policy. But if you want to, if you're in the Atlanta area, I don't think there's a better dentist around. They are awesome. Just the whole team is amazing. Amazing. Larry. Morning, Tyler. Morning, Mark. Morning, Alexander. Just the whole vibe of the office is really cool. She does Botox. She does second opinions, TMJ treatments, teeth whitening. She's a holistic dentist. So what I like about it is she doesn't, she'll do pretty much whatever you want and guides you in a way that's not forced upon you. Like, I didn't want my damn wisdom teeth taken out. And if you remember, it was a year ago. I got my wisdom teeth taken out. I trust her. She said, you're 54. I was 53 at the time. She said, you're 53. She said, you've got to do this. There's no ifs, ands, or buts. Your teeth aren't that healthy. So, let me see if I need to bring this down a little bit so you can see the top. No. Let me hold this down. I don't know why this screwed up like that, but it did. Okay. I'm going to shrink it down a little bit. And then we'll come up. There we go. Okay. There's definitely some blurriness, I think. I don't know why. This weekend, I'm going to get everything done this weekend. I just don't have time during the week. Let's do some scans here to see what's bullish. Ugh, stop. The daily stock pick scanner. Oh. What the hell's going on? Let's go to core investments because that's where it usually starts. Nope. Nothing. Is there really nothing? Hold on. I'm going to relog in here. We'll go to the scanner. It starts off with core investments. Then we'll check my brokerage holdings. Then we'll check Bitcoin and crypto. Then we'll check covered call ETFs. Then we'll check energy names. Rig. Okay. Scans. Rig. I haven't looked at Chewy results. I mean, Chewy I ordered from a couple of times. I typically use Amazon or Amazon, Chewy, or I'll go over to Petco, I think it is. I will tell you I am getting annoyed by the amount of emails that I get from Chewy. It's got to be 4 or 5 a day. And I don't know if that's good or bad. But if I'm ignoring them, I'm kind of thinking it's a bad thing because I am ignoring them. Let's see, watch this. And honestly, I don't have that much to really go over today. Because let's be honest, it's no, we're gonna do the Dow. It's all about one stock today, and I think they kill it. I honest to God do I think it goes up by 20, 30, 40%? No. I think I said it yesterday on Spaces, and I'll be on Spaces again today. I was on Spaces for 2 hours yesterday. Man, I don't know how anybody listens to freaking Spaces. These guys love to freaking talk. Anon's really good. Okay, let's see. Strategy tester. We're going to go to the 4 hour. I just did my scans. And by the way, you can automate that in Trendspider. And it sends you an email every morning. I need to do it here on live on air. Boy, that's a great chart. QQQ. We had a nice green in the morning, 0.75, and then a little red in the afternoon. Kind of typical. I didn't expect anything yesterday. I mean, the MACD crossed down. The algorithm didn't get you out, even though the MACD crossed down. Okay, let's see. Let's look at Chewy. And then I'll open up some of the. Okay, Chewy went into earnings. It's up 2%. Let's go to here. And let's look at Chewy. This is one that people like to trade. You can listen to the call on Earnings Hub. I really like Earnings Hub. Wow. They killed it. Wow. Net sales per active customer reached a record high of $530. Net sales per active customer. Oh, that must be lifetime. Yeah, ANF was one I have listed, and they killed it. I mean, ANF, from what I saw, beat, I think, the guide. Yeah, look, beat by 12%, improved operating margin. I think ANF, honest to God, I think you buy the pullback. I haven't listened to the full call. I don't know about the notes. We can look. Brian from our Facebook group, by the way, this is one. So if you go into Seeking Alpha, those of you with Seeking Alpha, and just go to top stocks, it lists automatically by quant rating. And the top one is this PSIX. And so when I had pointed it out yesterday, or a couple of weeks ago, I had mentioned, if you look, and I'll look at ANF, but PSIX was one that I had put a line in. And it was based on a weekly chart. And it was based on previous kind of stuff. And I said, hey, I think if this one holds 12, I think it's going to 20. And what happened? We're at 20. So this is how you can use Trendspider. If you look at this stuff, it's how you can use this stuff to really see how this trades. Look, it was very clear that 20 was a previous kind of a top, a resistance, and I think it spent this week the top, the high is $20.90. So, and right now you're trading at $19.96, and we're at Wednesday, and the RSI is at 87. If you don't think that one's going to pull back, buy some puts. But this one has shot up. I mean, since May, it was at $2, near 20, 10 times your money. And again, it's been a top stock. We can look at this one. Let's look at the quant. When did it go strong buy? It went strong buy in May 14th. So let's look at the chart and see where it was May 14th. There's 13th. The 13th, that week, it closed out $4.50. So if you just watch the quant when it went, 5 times your money. Trendspider's, Seeking Alpha, their quant is really good on a lot of this stuff. The quant beats the market. I mean, if you want to read about how the quant beats the market, here, I'll put this in the show chat. Paste. I don't know why it doesn't let me. We're going to pin that. That's how the quant beats the market. So listening to the quant, by the way, if anybody missed it, since everybody's tuning in, I'm decked out in Trendspider gear. Trendspider decked me out. Let me look at A&F, because the only thing I got was results, earnings snapshot. There we go. Broad-based net sales growth. The Americas led performance. Operating margin expanded. Operating income, net sales, expects Abercrombie but will continue to outperform Hollister brands. Beat. I mean, what's bringing this damn thing down other than, hey, it's done really well and people are taking profits? Let's look. I mean, the PE, the PEG, growth, profitability, momentum. I mean, what in the world is causing this 10% drop? They beat. So, Patty, if you got some information that I'm not seeing, because is it the guidance? I mean, let's look at some of the headlines on FinViz. Sales beats underwhelms after big run up in stock. That's what it is. They're just taking profits. Comparable sales rose 18% in the second quarter, exceeded the 15% growth that analysts had projected. The outperformance was driven by Hollister. Shares of Abercrombie fell 11%. Abercrombie is held to a higher standard than most retailers, so people will probably be mostly underwhelmed with these results. Once known for its perfumed stores and shirtless models, highlighted the increasing uncertain environment for retailers in a statement Wednesday. Even the company raised its full sales. They raised and beat. I mean, it's just again, anything that looks like that, okay? It's just most likely your support. I would say that 150 is going to provide support. If the 150 doesn't provide support, and I would say hold off for a couple of days. To have some patience. Let's see what this stock does. No need to rush into this one. The valuation is there. I mean, again, as long as they continue to grow, the valuation's there. Once the growth is gone, but they're continuing to grow. So I think that's an overreaction. I like this stock. I haven't worn their clothing in a very long time, but crypto world, cryptocurrency slide. So, I do have to put the super micro short in there. If you didn't know, there was a short seller. Hindenburg Research came out with short seller. We're going to put this in the oh, and I do want to actually put let me see, Twitter. Jason put out a great SMCI analysis. Jason at Trendspider. There he is. Krutsky Trades. Copy link. And we're going to put this in as well. Okay. I'm going to close that down. We're going to go back home here. And then we're going to look at cryptocurrencies. A lot is writing on NVIDIA. PSIX, we'll go over, the chart there. Elf Beauty. We talked about Elf yesterday. Sentinel-1, I said that maybe this one's a good indication of how CrowdStrike will do. They actually, posted really good earnings. Affirm we'll look at. Dell we'll look at. Abercrombie. I said maybe buy the dip. I kind of agree. We'll go over Jason's video here. And we'll go seeking alpha. And then what happens with rate cuts? I will include this. There's a chart. Yeah, Netflix, when it gets over 700, until it can hold 700, when it pops there, I'd sell it. I'd sell it. I don't think. In fact, I have to talk to my dad about that today. You're reminding me. Cyber, everything will move with NVIDIA. Everything. This is part of the reason why I'm patient. Is I don't care what the market does. I pulled out some profits. I'm sitting on 90% invested. So I'm going to turn this TV off. I can see it over the top of me. TV off. There we go. Yeah. I don't think there's anything that, we need to talk about other than I like this chart looking into September. I like that bounce back there. I like this pullback. Okay. So I'm going to hit record and we're going to go. And my apologies. I'll have a better setup, I think, next week. If I get to it today, we'll have a better setup tomorrow, but I don't know. And I am looking into why you can't rewind the live and start from the beginning. It is definitely a setting in OBS that I just don't know, and I've got to start up the computer behind me. I think you can see if I move over here. That's my old computer, so I'm gonna put that up. Okay, I'm gonna hit record, and then if you guys want, you can hit Amer on. I know you put that one on. I think brands, specifically like Abercrombie, you can see that one running up. Look at On. I mean, again, if you have a good company with good products, with good earnings and good management, that's what On is. And On is just stealing Nike's share. They're just owning Nike. They really are. And look, I mean, that's a huge, almost 20% since what, August 9th? 20 days? So, and it's it's not value. I mean, you're paying a premium for it. So I just think certain names like that we go into September with, I think that's where you see this portion. And I know I'm not alone, and I know I probably scare some people, but don't follow me. Again, I'm 90% in the market. I will be fine if the market goes up or down. That's where you have to kind of almost make your own decisions. Morning, Scott. So, okay, here we go. I'm going to hit record. And sorry, I don't mean to be preachy. Hopefully I'm not. Good morning. It is Wednesday, August 28th, and it's the granddaddy of earnings day. I am decked out in Trendspider gear in honor of NVIDIA earnings day. I've got a Trendspider shirt. I've got a Trendspider hat. Thank you to Trendspider for sending it to me. I was a customer before I was affiliate, so I paid for years for Trendspider. I am a fan of it. We will go over all the charts. I will go over the history of Fed cuts. We'll go over SMCI at a short seller. Hindenburg Research come out. Abercrombie and Finch is pulling back on earnings. I like it. We'll go over Dell earnings. Affirm, CRM, CrowdStrike after Sentinel killed it on earnings. We talked about ELF. They got a buyback. We'll talk about that one. We'll talk about PSIX, which is one of the top quant stocks. And then we'll talk about crypto and NVIDIA, and we'll get to some social requests. Okay, but the first thing that I want to go over is the chart on the Qs. And I've posted this chart many times. And over here on the left, you'll see a red highlighted box here. So this isn't something that Trendspider does for you automatically. This is where you start to look at charts and you start to see things. This is from last year, okay, August 31st, all the way to November 15th. What we had was what was called the October low. It was the end of October, okay? I think we are living through this type of cycle again. I just have this feeling. Look at how the MACD was up high, came down, okay? Look at how the RSI was up high, came down. We had 3 different turndowns of 8% or more during this time, all the way from July. There's another one to the left, but I don't want to move it to the left. I want to just show you these two. And the reason is the MACD on this 4-hour is crossing down. Doesn't mean we can't go for another run. Doesn't mean that we won't go up. I just don't know the direction of the market. There's nothing that's giving me a clear sign that we can go up. Nothing that's giving me a clear sign that we're going to go down. It's all on NVIDIA. I think even if NVIDIA, and we'll talk about it because I'll show you last year NVIDIA. We'll look at last year's earnings report at this time, which felt very similar. If you remember, yes, I bought during this time last year NVIDIA. I've gone up significantly since last year in NVIDIA. We'll go over that, but it feels very, very similar, and I don't want to buy up here. I want to buy a little bit down here. I don't want to buy at the bottom. You're never going to time the bottom. So again, where are we on the Qs? Yesterday, we had a nice little green candle in the morning. The candle in the morning was a 0.75. We opened up at 473. We talked about how August opened up at 471. Where'd we close? 476. 476. Where are we trading right now? 476. It's flat. Expect nothing today. Expect some stocks to be up, expect some stocks to be down. But until NVIDIA reports, I don't think you make a move. If you want, do NVDL. We talked about yesterday. NVDL was a great play yesterday. I think it was up 3 or 4%. But again, with the Qs, I'm looking at last year like this. And I think this little upturn that we're seeing right now is very, very similar. And we're going to see this little downturn. And I will post in the newsletter, okay, dailystockpick.substack.com. How do you get there? You go to Linktree. And it's the Daily Stock Pick Substack newsletter right there. It's free every day during the week. I will post a history of Fed cuts, okay? S&P 500 forward 12 months returns from cutting cycle starts dates. Red bars are 12 months forward. And you'll see this in the newsletter, okay? It's from Josh Brown. It's just a masterclass of rate cuts aren't always great. You know, it depends on which cycle you're cutting in. There's a couple of blues, mostly reds, and the reds are big reds. So you want to make sure that you're comfortable in the market. The charts are the only thing that has no emotion. If you read an article from a douche on the internet, you sign up for my newsletter and you say, well, Gary says, no, the only thing that matters is the chart. The price is the ultimate factor. Never let that slip from your mind. You can't tell me that 100% we're going up or down. We're right in the middle of this range that I have between 450 and 500. We're at 476. That is almost directly in the middle of this range. So I don't know where we're going. I felt uncomfortable. I pulled 5% out. I unfortunately pulled it out at this time, down here at the bottom. So I completely have FOMO. But did I get out completely? No. More time in the market means more money because ultimately you bet on America. America. Fuck yeah. Go and watch Team America from South Park, guys. There's a great song. We say it in this house all the time. America. Fuck yeah. It's a great song. So where are we going? We'll talk about that a little bit. Let's talk about some individual stocks. Supermicro. Yesterday, I know a lot of people ask me about Supermicro all the time. It's the number one. I think it's the number one S&P stock still, gainer for the year to date. I don't know. Hindenburg Research put out a short report. They were shorting the stock. This is a company that has shorted several stocks and it's come back to bite them. Pre-market, it's down 8%. This was down as much as I think 15% yesterday. It's not good. It's not good. This is one of the most high-profile short sellers. This isn't the first time Supermicro has been targeted in a short report. In June 2023, Spruce Report issued a short call on the company. How'd that work out in January 2023? Supermicro is scheduled to present Wednesday at Deutsche Bank's technology conference in Dana Point. Remember, their earnings on SMCI, okay, the quant has moved it to a hold. It's not as great as it was. And the reason is the profitability. It's these margins. The margins at 14%. Now, SMCI has claimed that the margins will come back. What do you believe? Now, no matter what you believe, Jason from Trendspider, he made a video about SMCI. He never posted it because it seemed like too much of a stress. But after the short sellers report yesterday, he put it out. It is following this exact chart. Okay? So you want to find out where that mean is. Watch this video. I will post this video. But again, SMCI, if you're in it, take a look. My average purchase price is still below the price where we're at today. We'll show you the price where we're at today. I think the algorithm has you out. You're at 490. You're under 500. Algorithm got you out yesterday with a 7% loss. We talked about how the algorithm performs. It makes you 291%, over 700% gain over 2 years if you just bought and held. Again, if you bought 2 years ago, you're up 700%. The reason I was holding on to this was because I liked this sideways move here that was historical last year during this exact time. What have we seen during this time? We've seen it fall off a cliff. Now, from a volume standpoint, there is nothing when it hits 450, there is nothing below that. All the way up until 350. Nothing. So don't expect something to catch this. Now, the MACD has completely reset on this weekly. The 4-hour, you can see it. It's super weak. RSI almost in oversold territory at 34. So I don't want you to think that, hey, we're going to throw out the baby with the bathwater. But it's weak. And if you've got losses in this one, maybe take some losses. Again, it's down at around $500. Maybe take some losses. I'm playing with house money on this one. So I've sold a lot of this for 100, 120% gain, somewhere in that neighborhood. I've sold a lot of it. I'm still holding on to a lot of it in retirement, so I can't write off those losses as well. But the point of this is never make something like this your largest position in your portfolio. Okay, I have Apple. Apple is between 50 and 65% of my portfolio. I am comfortable with that. I would not feel comfortable with 60% of my holdings being in SMCI. Not one bit. Okay? I sized my way into this. I need to size my way out. I will absolutely get myself out of this one, unwind it. Are we getting back up to the highs? I don't know. Jason goes over this as well. Jason goes over a great... I can't do it justice. Jason does it much better. Now, let's talk about some earnings here, because we've had a bunch. Abercrombie and Finch, they beat and raised, okay? Let's go and look at Abercrombie and Finch on Earnings Hub. Look, they beat by 12% on earnings per share, and they beat by 3% on revenue. Yet, when you go over here to Abercrombie and Finch, and you look, and they raise their guidance, but they're down 10%. Let's see. Yeah, 9.56%. Why? This is why. Look at that rocket ship that we're seeing up there, okay? Right now, you're trading at, let's see, it's 149. You're trading right at 150. Where's 150? It's at the 21-day on the weekly. Look at how high the MACD is. Look at how the RSI has reset down to 60. That's still very high. So this one is just a matter of people. It beat by a lot, and it beat the expectations, and they guided up. They have put some language in, hey, the consumer's a little bit picky, but there's no reason not to get into this one. The valuation is still good. Again, the quant says it's a strong buy. It will probably change tomorrow based on these earnings. The quant beats the market. So the quant beats the market. You know what else beats the market? My algorithm. And if you take advantage, we're going over all these charts. So all of these charts that I show you, they're in Trendspider. Trendspider is having a monster sale right now. Goes on for 15 more hours. So if you're listening to this on Wednesday, make sure you get in on this because it's an early bird special. The prices go up tonight. Tonight, 15 hours. I think that's midnight Eastern time. The prices go up. So the prices go up by a little bit. I think, again, they're still going to have the Labor Day sale. But if you're thinking about buying it, don't wait till the weekend. Buy it now. Again, the standard, you don't have a discount on the standard, but the standard is not the plan that you want. The enhanced is the plan that you want for $52 a month. And if you're new to trading, I brought this up yesterday and I'll bring this up again. If you're new to trading, technical, okay? Get the advanced. If you have it in your budget, get the advanced because it comes with unlimited one-on-one training. Now, what's good about this is the sale includes monthly. You can get it for monthly. Pay $300 for the month for the advanced. Get the unlimited one-on-one training. Then you can move to, a yearly plan for the standard or the enhanced, whichever one you want. But again, the point is, make sure you're getting something that fits within your budget. If you've got a $10,000 account, portfolio, it doesn't make sense to spend $1,000 on the advanced, $938. If you've got $40,000, $50,000, it might make sense to pay $626 for the enhanced. Okay? We'll go over more Trendspider as we go, but I wanted to bring that up early on because, again, it's an early bird Labor Day special. But Abercrombie and Finch, my play on Abercrombie and Finch is, I think, use this previous high at 140 right here, okay? We're looking at about 140. Use that as potential support. So as you get down to 140, if you're going to buy one share, that's $9 from where it is trading right now. Just buy it. And then you can dollar cost average your way in. I don't think that this one has too much. Again, the valuation's nuts. The PE 20 for a freaking clothing line, yeah, it's ranked from the quant perspective, number 1 out of 37. The Gap is number 2. Land's End is number 3. Okay? I like this one. Foot Locker, they reported this morning. It's horrible. and they're down 7%. And look at the quant rating on this one. The profitability, horrible. So again, the quant does well. I think for ANF, what I would do is wait a couple of days. If you want to buy it, go ahead and buy it. But wait a couple of days, see where it settles out, because I think it goes back up. Again, they beat and guided higher. I think they're just getting some profit takers out of the way. I like that one. I like it a lot. Now, Sentinel-1. This is the CEO that trolled CrowdStrike. So they did well. I think it's a guide for what CrowdStrike's going to do. I really do. I don't think you can take it one-on-one that, hey, Sentinel-1 did well, so CrowdStrike's going to do well. Palo Alto did well, so CrowdStrike's going to do well. I don't think it's one for one. Remember, the biggest thing with CrowdStrike is how many big name logos did they sign with new contracts? Did they have trouble with new contracts? Are they pulling back their guidance with some of the forward stuff? That's going to be the crazy part of CrowdStrike. But I do think CrowdStrike returns back to 300. At some point in time, I think CrowdStrike gets back to 300. Do you want to buy it now? 200 was the time to buy. I bought it 300. I bought it 200. I'm right there at about 230, I think, is my average purchase price recently. I have some where I bought way back when at about $200 as well. So I'm doing fairly well on this one. The MACD's up there. The RSI's high. I don't know. I mean, this one makes sense to buy. If we go to Earnings Hub and we take a look at CrowdStrike, again, it's today after the bell. What are they expected? 97 cents estimate. They brought it down, but the revenue is expected to grow. That's where they could get dinged. Again, you have to factor all of this in. CrowdStrike's main value, Sentinel-1. The value of Sentinel-1 is just in how beaten down it is. But the king of growth here has been CrowdStrike. Not even Palo Alto Networks. Palo Alto Networks has done great. I own a lot more Palo Alto than I do CrowdStrike. I wanted to get into more of CrowdStrike. If for some reason they come out and there's no problem with CrowdStrike on this one, I will transition from Palo Alto Networks over to CrowdStrike. Not 100%. But I will start adding to CrowdStrike like I did with Palo Alto Networks. And if we just look at this chart, take a look at this chart, because this is the weekly chart. You can see it used the 200-day as support, and it bounced right up there. Now you're using the 50-day as resistance at 281 into 269. Last week we got all the way up to 278. Again, it's using that as resistance. Until that becomes support again, it's resistance. But look at every time you had the chance to buy this under the 50-day, even back here before it's, when it IPO'd back in 2019, and then it got up here, we finally have the 200-day now. You can see the 200 days moving positive, 50 days moving positive. We were going until they shut down the world. So I'm okay with this one. I'm perfectly okay with this. We talked a little bit about ELF yesterday. ELF launched $500 million buyback, and they're up 2%. Is this the time to buy ELF? Well, the valuation kind of sucks. The profitability kind of sucks. The growth, A+. The momentum hasn't been great. So is ELF the play on this one? I don't know. I mean, levered free cash flow is 4%. It's not great. I mean, we can look at the chart. Again, I think what this tells me is when the stock dips like this, they're willing to step up and buy. The algorithm has you out. Now, the algorithm makes you 94% versus 301% if you just bought and held. So how do I look at that? I say, you know what? I'm pretty freaking happy with 94%. I don't know the beauty sector. I don't wear makeup. If I'm going to make 94% by following the algorithm over 24 months and it's 24 positions, one per month, and my average win is 16%, I'm pretty happy. I'm not happy with this ding right here. This is one of the most shorted stocks in the market. So you can take it for what it's worth. I think ELF, from a long-term standpoint, from this weekly, you have some time to pull back. You do. Is this the time to buy it? I think I'd still be a little bit patient on this one. Now, if we look at ELF and we go and look at Wall Street, there are 15 analysts that follow this. Their average price target is 221. You're trading at 115. They chased it up. They will start chasing it down. I like that they announced that they're buying it back, though, because as you start to see people sell this, who's buying it? It's the company buying it. They believe in their own growth. So I like that one. Let's go over to Earnings Hub and let's take a look at there are some other earnings going on today as well. Okay, CRM. This is Salesforce. They are expected to report $2.11. They reported last time $2.44. $8.28 billion in revenue. They reported 9.13. Let's take a look at the chart. Let's see what the chart says. Because what does the chart say? It's run up a little bit. You know, you had this buy at 252. You're trading at 264. The 200 days moving negative. The 50 days moving positive. You could have a golden cross on this one. Am I buying into this one? I own this one. I own this one at about 220, I think, is my average price. Okay? I rode this through this downturn because I think I bought somewhere in this neighborhood in February of 2022 when it looked like it was trading sideways and I thought it would go back up. And I just held it. And I've added a little bit to it during this time. Not much. This is a very small position in my Roth IRA. I thought this one would explode. I'm in. I'm making money. I'm perfectly happy with it. Right now, the weekly looks decent. The 50-day still moving positive. The 200 days moving positive. The MACD is right on the oscillator, and the RSI is at 50. I'm not making a move on this one. But if they do suddenly have great earnings and they start to pop and they get back to this 300 level, I'm thinking of selling. That's because you can clearly see, look at this, 311. What did it hit here? 317. You've got a double top right there. Until that breaks out above there, you're going to see the resistance. Okay, so if you buy here at 264, expect 311 to be the top that you could make until things change. Let's go and look at another one. Affirm. This one was interesting. I brought this up on Spaces yesterday. Affirm. Earnings. They're expected to do worse this time. They lost 43 cents last time. They're expected to lose 51 cents this time. The revenue is going to go up, but they're expected to lose more. Could they beat it? Last time, they were expected to lose 69 cents. They reported a loss of 43 cents. What makes you think they're not going to report a loss of 43 cents? And they beat it by 37%. Let's go look at the chart. Affirm. You know, again, these are bets. These aren't long-term kind of things. But look at what happened the last time that they beat. Okay, back here in May. They beat and it didn't do anything. And you're coming back up to that point. Now your 50 days starting to turn positive. I think it's too late to get into this one. I do. Look at 25% over here. Now the algorithm makes you 17% versus buying and holding. Makes you 8%. Your average win is 39%. Your win right now on this is 30%. The only way you go up is if they destroy earnings. If for some reason they turn a profit this time, good God, wait for this one to turn. Because, you know, again, the weekly, it's just showing sideways. It's showing there's no volume above. There's some volume above, but there's no volume below. So if they don't beat, you know, that Bollinger Band looks tight. It looks like it's ready to explode. Where's it going? Well, the RSI is at 53. It could go lower. It spent a lot of time in 2022 lower. So I'm not huge on this one. I think you could make some money. I think it's interesting. But it's nothing that I'm throwing money at. Again, you know, just looking at an opportunity because it's not all about, NVIDIA today. We got HPQ. HPQ probably reads into Dell tomorrow. You know, how did HPQ do? It's an interesting one. But again, you want to take this one for what it's worth. Now, anybody remember PSIX? I brought this up a couple of weeks ago because if you go over to Seeking Alpha, okay, let's go to Seeking Alpha. Because if you have Seeking Alpha Premium, it is the second link, by the way, on Linktree. You save $25 and you get a free 7-day trial. And this is how you use it. You go over to the top stocks. Well, this was noticed by, I think, Brian a few weeks ago. He said, hey, PSIX looks good. He did his research. He bought in at, I think, somewhere in the neighborhood of $8, $9, somewhere in that neighborhood. Back in July, this one had moved up to the number one spot. It's an industrial, it's heavy electrical equipment. Everything is an A on this one, okay, from the quant standpoint, from the 5-factor grades. And he had me look at this. And I didn't believe in it. I personally, I wasn't in on this one. But I said, let's take a look at a long term of this one, because the short term doesn't really tell us much because it's been in this upward trend. But if we took a look at the long term one, and we just took a look at the places where it popped, okay, and where it popped to. So this was a downtrend, but you can clearly see that 20 was a support, 12 was a support level, 20 was a pop level. Then you had this pop level at 8, okay? Then you had this pop level at 3, and it finally went down. It quickly ran through everything. As they got their financials in order, it quickly ran through. You just had a golden cross, okay? But it's meeting some resistance, okay? $20. It's trading at $19.96. But the chart was clear. If you use those previous pops and you just saw, hey, this is a great one. Maybe the financials are good. Kudos to Brian. But that's how you use these tools together. You can use Seeking Alpha to find the stocks. Then you can use Trendspider to actually chart these stocks. Now, it's a good one. It's a good one. I liked it. I posted this chart. I'll post it again in the newsletter. The big daddy of them all. Okay, we'll talk about crypto after this. A lot's riding on NVIDIA earnings. Okay, demand is likely intact through 2025. Seeking Alpha commentary, so far so good with the signals we see from Taiwan Semi and SMCI's most recent earnings report. Foxconn commentary helps as well. Blackwell is on its way with GB200s are going to crush expectations in 2026. We're getting the green light from suppliers. The delay is immaterial at this time. Demand, big cap tech remains high. Let's be real. Nothing can stop this. That's the commentary from Seeking Alpha. Now, is that the truth? So let's take a look at what we see in NVIDIA, because what I want to point out is last year. And I want to point out this. Last earnings period, they blew it away, okay? It was at 950. They went all the way up to about 140, I think. High 130s. That's where you went. Remember, they had their 10-for-1 split, so this was $900. It just seemed expensive. Then their 10-for-1 split brings it back to 96. So now we're trading at 127, and we clearly have a cap at 130 on this one. Clearly a cap at 130. Well, let's go. You remember at the beginning of the show, I said it feels like last year, okay? 2023. Let's take a look at August 2023 when they reported. And right here, the open was 44.49. Okay, the open was 44.49 on the week that they reported. The close was 46.02. That's 460 because, again, it had a 10-for-1 split just recently. Now, if you move over to the next earnings period in November, the open was 49.31. So that's 490. The close was 47.78. They killed it on these earnings. Just understand, they killed it on these earnings, and it just traded sideways. We didn't see the start really, really moving until January. And in January, you were at 47. That's 450. You went all the way up to 1,000. Okay, it took a couple of quarters. I would expect to see this trade sideways for the next few quarters. And the reason I say that, take a look at the last 26 years. August, positive, 77% of the time. It's the best month of the year. Then you've got 2 months where you really don't do anything. It's 56%. It's not the worst. I mean, it's still good. But you still got a mean in September of minus 2.35. And in October, you've got a mean of 5.26. I think we see volatility in September, and I think that includes NVIDIA. I'm not rushing to get into this. More than likely, whether it's up or down, I'm buying. Okay? I just want to see which direction it is. I went over it yesterday. I've got plenty of NVIDIA in my portfolio. If you don't have NVIDIA in your portfolio, buy 2 shares today before earnings. Just buy 2. That's what, $250? Buy 2 shares. Just buy 2 shares. That's my suggestion. If you have NVIDIA, don't do anything. Just don't do anything. If it goes down, you buy more. If it goes up, you wait 3 days and then you buy more. Because I think we see some lower prices. Do we get back to 100? I don't think so. I think you settle in around 120. I think they blow it out of the water. I think you settle in around 120. But remember, I'm a douche on the internet. Nobody knows what's going to happen. Nobody knows how the market reacts. That's the key. The market will react on its own. So don't take my words and say, well, Gary said it was going to go up. No, you do your own research. If you don't own this, I would urge you, own it. Own it outright. Because this is one of the companies that most likely will be transformative over the next 3 years. The second that one of these hyperscalers like Amazon, Microsoft, Google, one of them comes out on an earnings call and says, we're going to pull back on our spending. We know Meta's not going to do it. There's no way Mark Zuckerberg pulls back on his spending. If Mark Zuckerberg pulls back on his spending, that stock, which is trading right now at $517, is an $800 stock. If he just pulls back on his spending, that's an $800 stock because they just print money. And they will do a dividend, they will do a buyback, they will do everything with their money. But right now, he's buying NVIDIA chips. There's a reason he was on stage with Jensen Huang a couple of weeks ago. It's because he's buying a ton of chips. So, and he doesn't care about the delay. He's going to buy them anyway. They're just going to be pushed out a quarter. So when you get a pullback on this one, you buy it. For right now, this is the one company. And remember, the benefit that they have is you can't just go out. This is like a Windows and an Apple machine. If your entire company's on Windows and somebody gets Apple, there's no support for it. There's nothing, it's kind of a standalone thing. So it's even worse than that. The software just doesn't work when you interact with chips. And, remember, there is an issue here. Apple trained their AI on Google chips. So Apple is taking a very smart and structured approach. When you look at NVIDIA, the biggest thing that they've been able to do is keep their margins up. They're able to charge a premium, 75% gross profit margin. That's huge. And they're going to continue to do it. And Jensen Huang has said they're going to move to a software company. So they're going to have some service revenue as well start to creep in. So it's going to be good. I think they're going to blow it away. I don't think anybody's expecting them to miss. The question is going to be how the market reacts. It's not about, is it good or is it bad? It's going to be how the market reacts. Do people take profits? If you get down below 100 again, just buy it. Just buy it. Just buy it. Now let's talk about crypto. Crypto slides amid a wave of long liquidations. Bitcoin briefly falls under 60,000. I continue to say iBit and MicroStrategy are the two plays that I'm pouring into in this one. I'm looking at the algorithm, and the algorithm doesn't have you out. Right now it's 938. This little red candle right here, iBit is down 3.78%, and it doesn't look strong. I'm in it like 33. I think I'm in it 36 as well. I've added a couple. We're at 34. And MicroStrategy, which is just basically a triple levered ETF on Bitcoin. This one's down 2%, but the algorithm doesn't have you out. Looks weak. Would I be buying here? Probably not. But you're under 60,000 on Bitcoin. Under 60,000, I think you can add to it, but it's not something that you add to and then tomorrow you take the profit on. This is something that I'm putting in there for the long haul, okay? I'm just forgetting about it. It's money that I don't even have in my bank account because at least a year, if not more, I'm just putting it in there to forget about it. I sold out of crypto in 2022. I made that mistake. 2023 and 2024 so far have been phenomenal years to be in crypto. I sold out. I made the mistake. Don't call me diamond hands because I'm not one. Okay, let's talk about some of the requests. How do you feel about GLP-1 ETFs like OZEM? This is John from Spotfiy, OZEM. Let's look at this one. This is Roundhill Group. I think they just came out with this one, so it's kind of new. Yeah, the backtesting only goes back 98 days. So let me talk about ETFs versus kind of single stocks. So I like ETFs. But when you look up an ETF, what you really have to do is you have to go in and you have to look at the expense ratio. So first thing I do with an ETF to kind of look at is I look at the holdings. So this is Eli Lilly and it's Novo Nordisk. Those are the two companies that make up what? 40% of this holding? So, they're not betting on others. They're betting very small on the others, but you're holding Eli Lilly and Novo Nordisk. So then you go over here to the expenses and you see it's a 0.59. Okay, the quant doesn't rate this one, but 0.59 is fairly expensive when you can just buy Ozempic and Novo Nordisk. Buy those. Now, is it going to do better? Let's go and look. Let's go and look. So, ETFs will never do as well as the leaders in their category. So, if they do have these two, then you want to take a look at it. Look at it. Ozem over 1 year. We can go 6 months. Let's go 6 months because you look at Ozem and it's beating Novo Nordisk, but it's not beating Lilly. So you'd be better off holding Lilly and Novo Nordisk. I think that's where you look at it. If it's anything over a point, let's look at some of the XLV healthcare. Okay, XLV is similar. Let's look at the expenses on XLV. It's 0.09. That's cheap. That's cheap. And you look at the holdings in this one. Number one is Eli Lilly. So I'd rather have this one than the GLP one. I don't know that it's going to beat it. Let's see. Let's chart it against select symbols. OZEM. Let's look at it over 6 months because I think it's 6 months is when it, OZEM actually beats XLV, so it's doing better. But I think you just buy Lilly. Honest to God, I think in this situation, I think you just buy Lilly. Lilly's the one that's gonna make it. I think this OZEM, I think they're gonna have smaller ones. I think if you want to buy smaller positions, I would probably just, if you want to put, say you want to put $100 into OZEM, okay? They have how many holdings? Let's see. They have a number of holdings, 36. I think you take the top 10, and I think you just buy the top 10, and you buy it in that percentage, and you're saving yourself 0.59. I think that's what you do. In this instance, I'd say probably those top 10 are going to make the grade, and the rest of the holdings probably not. Because let's be honest, Novo Nordisk and Eli Lilly are driving this ETF. And so I think that's the way you do it, John. I just don't like giving my money to a Round Hill group. Again, 0.59%. It's not much, but it kind of adds up. Damon, remember when I brought up, this is from, I think it's from Substack, the newsletter. Remember when I brought up XPO? It was a long time ago, but I took the gains at the beginning of the year, already been in for a long term. I should have just held it like Meta and Google, but I think you should take a look at it tomorrow. It's a strong sector. Hedge funds increased liquidity. Insiders look to be safe 3 months ago. Return on equity, 20%. Technicals look good as well. Momentum positive, 20 and 200 day. Also, it's starting to look like a double bottom pattern off a strong support level with higher highs on the daily. Now the weekly loss looks like it's hitting resistance, just not that. He goes into a lot more. Let's look at XPO. Okay, you can read it. I'll put it in the newsletter so you can read Damon's analysis. Damon's great at this. Let's look at XPO. XPO, it does look like it kind of found a bottom there at about 100. You're at 120 right now. Looks like a little bit of a top here at 128. Let's take a look at the weekly because the weekly is important. Looks like the MACD has reset. Maybe we're going for another new high. Maybe we're going past that 130. I think right now at 119, you're probably looking at that 130 as your top. Until you get past it, I'd rather buy at that 130 thinking that it's going to be support than buy at 119 and have 130 be resistance. That would be my only thing against this. Now let's look at XPO. Because let's see what the valuation, it's a D, and it's because the PE super high, but the PEG ratio pretty low. It's not bad. Their growth is a B. When you look, they're growing their revenue by 5.4%. When you look at their levered free cash flow year over year, it's not listed, not great. Again, profitability. 16% gross profit margin. Do they have a problem with profit margins? I don't know. That the sector's at 31%. Levered free cash flow, they're losing 10% year over year. Trailing 12 months. That's not great. Momentum, A. You got 9% over 3 months. You're kind of even over 6 months. 9 months, you're up 32%. 1 year, you're up 71%. That's fantastic. Fantastic. Remember, this is an industrial. Industrials have done great. Industrials have done all. It's ranked number 4 out of 21 on the quant. Ryder's number 1. We can go and look at Ryder. Let's look at Ryder. Valuation's an A. Okay. PE, 11. They don't have a PEG ratio, so they don't give anything. Growth, 2% versus the the XPO had a little bit higher. Profitability is where they're actually beating. Their EBITDA margin, 21%. That's an A. CapEx to sales, 18%. Momentum, this one's up 15% over 3 months. Over 6 months, it's up 25%. 9 months, it's up 31%. Remember, this one is not beating 1 year performance. So XPO, good long term. This one better in the short term. Revisions, you got 3 up, 1 down. Nobody's really covering this one. If we look at the ratings and we look at Wall Street on Ryder, it's a 7% upside. So maybe not something that you want to get into right now. If we look at XPO, it's a 9% upside. Ironically, remember I said, hey, 130 provides a resistance on XPO. 130 is the average price target. So it's interesting. Not something that I'm getting super excited about. Trebs from I think it's Spotfiy wants me to look at AMAT, Applied Materials. So Applied Materials is one that makes they make semiconductor stuff. We can go look at AMAT over here, and we'll read the summary of it. They engages in provision of manufacturing equipment, services, and software to the semiconductor, display, and related industries. Enough. They make the equipment that makes semiconductors. So it's ranked number 2 out of 29. It's got a strong buy in the quant with a D. Valuation, growth, profitability is an A+. Again, if NVIDIA is going to start making chips, AMAT is Applied Materials going to be providing the actual materials for them to make those chips. Algorithm has you out. I'd listen to the algorithm. It makes you 78%. If you buy this one, if you bought this 2 years ago, you're up 91%. I say this a lot. Well, I should say this more. Semiconductors are a cyclical business. So they go through cycles, which means there's ups and downs. Sometimes they overproduce. Sometimes they underproduce. When they overproduce, they have to underproduce because there's inventory levels and they have to sell at discounts. Applied Materials is kind of the same way. As we're building plants, then all of a sudden you've got this rush of materials that Applied Materials and LRCX and others have to put in order to build these fabs, okay? Intel's buying a bunch of Applied Materials stuff because they're building fabs. Taiwan Semiconductor, they're building a bunch of fabs. They have to put this stuff in. I think that 213 right there, I think that's a good level. So if you're buying at 195, I think 213 is where you're going. Let's look at Wall Street because there's a ton of analysts. 36 analysts cover this. Their price target, 239. Right now, it's showing weakness. I wouldn't buy into this. You're on the downside of the 9-day. Again, I think, it's resetting itself, but I think that 200 is probably your top. 239 right there. You can look at the 52-week range between 129 and 255. So when you get above that 230, I think then you and they start raising it. I think that's what you're past your earnings. You're past your earnings already. So the catalyst for this one, I think it's already done. With the algorithm getting you out, I'd wait for the algorithm to get you back in. Right now, it just looks weak. So Trebs, I'd probably wait on it. If you own it, I don't know. I mean, it depends on your outlook on this one. I just think that 230 is probably your top. So you're probably looking at the top there. I think there's others that have a significant larger top. So, scans. There were a bunch of leveraged ETFs, and they're all on the short side, which is interesting. So SDS. SDS is ultra short on the S&P 500. This one gets a buy-in at 2184. Is it telling us something about the market? Again, these are decaying assets. You don't want to own them for more than a couple of days, if that. Hibbs is a high beta bear 3 times. This is a short, 2216 on the S&P 500. Hibbs is interesting. I've traded that one before. SPXU. SPXU is the ultra short on the S&P. Again, this one gets 2630. It's interesting. Nothing that I would ever do because, again, we have NVIDIA earnings today. I think you get killed on the short side. I think you could get killed on the long side. Again, I think you could get killed either way. I think we have a huge candle, but I'm not sure which way. AAPD. Okay, it got you in yesterday. It gets you in again today. It gets you in and out. This is Apple short. This is the bear for Apple. Apple's up 0.14 in pre-market. You still have some strength in Apple. I'm not necessarily trading this one. You have RIG, you have Twilio, Electronic Arts, Adobe, and MasterCard. So remember, there's sales going on. Okay, Trendspider is the big sale. You want to take advantage of this one. If you've thought about Trendspider before, I would urge you. This is my number one tool. This is why I started the podcast, because I wanted this. If you don't know the story, and let's go into the story, because we're 44 minutes in. It's Gary story time. So I quit my job and I retired January 2020, 1 month before the world shut down. I lost 40% of my net worth over that 1 month, and it was because of COVID. I didn't know how to do it. I didn't know what I was doing. I knew charts. To the extent of I saw them falling. Did I know to get out? No, I was like, it's just, I don't believe in this. I don't think we're going to shut down. It's too much, blah, blah, blah. The world shut down. Then what did I do? In March, I said, you know what? In April, oil is at $12 a freaking barrel. It's got to go up. I'm going to go into UCO. Lost my shirt. 6 figures on UCO. Okay? I was trading this one while I was hiking. Didn't know what I was doing. At that point, I said, I want something that's going to protect me from the downside. That's when I developed the 4-hour algorithm. I wanted something to take emotion out of my trades. And so I went big tech. I went and I said, okay, Apple, Google, Microsoft, all of my main holdings, Amazon. I said, let me find something that works. So I used moving averages and I found something with the MACD. The MACD, it's based on the MACD. I said, I want that 4-hour algorithm. And I built it in Trendspider. Trendspider helped me. And I was a customer. I was a paying customer. So the contact us in the bottom right is super, super strong. These guys are fantastic. In fact, Jason, who I mentioned before from Trendspider, when I was building this algorithm with my buddy Steve, we went and we thought we found the holy grail. Because up here on the left, you can change your candles. And we went to Heiken Ashy candles. And now, when you go, the way the Heiken Ashy candles are calculated, it will get you in and out at the absolute top. It's not realistic. And so we thought we found the golden goose, and Heiken Ashy was giving us like a 10,000% return. Even after we took COVID out. Before COVID, it's giving us like a 10,000% return on almost every stock. We said, we found it. And Jason, the genius that he is, he's the one that responded, and I still have it. He was a customer service rep, so he's a master at this. And he basically told us it's the way that Heiken Ashy is calculated, and he explained it. I still have that chat in my Trendspider, and I go back to it all the time to remind myself there is always a better way. There is always a better way. I'm constantly looking at different strategies, and I'm building them. The 65-minute we built. The 5-minute with the great entry, I still haven't found a good exit on that one, but I'm not great at 5 minutes. I'm better. Again, we went over it yesterday. Pick the time frame that fits you most. 4 hours fits me most. So I have the 4-hour algorithm. I developed that around COVID. So if you're afraid that we're going to have a big downturn, remember, that's why I built the 4-hour algorithm. I take the emotion out of the trade. And so that fear, I don't have fear anymore. I sleep like a baby at night unless I have these freaking whitening trays in for my teeth. But I sleep like a baby at night. I don't worry about my investments because I have this to back me up. And when I see it start to go down and the algorithm tells me to get out, I'll get out. I'll get out. Trimming at 32% on Apple, I don't do it. I just add to Apple on this algorithm. It makes you 33.6% over 24 months. If you bought and held, you made 34.7%. Your average win is 10% on Apple. Let's go and look at Amazon. Amazon, it makes you 22%. If you bought and held, you made 27%. Okay, it doesn't time you at the very top. Look, got you out with an 8% right there. If you were looking at confirmation, you could have gotten out if you're trading Amazon. Let's go look at Google. Google's at 164. Google, it makes you 49%. If you bought and held 24 months ago, you made 44%. So again, the benefit of Trendspider is the 4-hour algorithm. We can look at Microsoft. It makes you 50% versus 46.3 if you bought and held. And again, you can see the entries here. You can set alerts for the entry. And mind you, this doesn't include any of the fundamental data, which is also included in Trendspider now. It doesn't include any of the insider buys, which is also included in Trendspider now. It doesn't include Nancy Pelosi buys, which are included in Trendspider with all the other government officials in there. It doesn't include any of the news that's in here. All of this I don't use, but I should be using it because I use about 25% of Trendspider's ability. Even NVIDIA. Look at NVIDIA. The run-up on NVIDIA was crazy. My algorithm makes you 669% over 24 months in NVIDIA. You make 636% if you bought and held. Again, taking emotion out of the trade and just taking a look at the entry and exit and trying to time those things is what helped me get through the next 2-3 years. And yes, 2022, I lost money in my portfolio. There was no way I didn't lose money, but I lost less than the Qs. And that was the key. That was my test. It made it through a full year of a bear market, and I lost less than the Qs. So I outperformed the Qs. And that's how I feel comfortable, okay? And so if you want Trendspider, you go over here on Linktree, linktr.ee/dailystockpick, the top link, and go and get it before this countdown reaches 0. It's 15 hours and 3 minutes. Okay? If you want Seeking Alpha, it's the second link. You save $25 and you get a free 7-day trial. That's all the quant stuff that I went over. That's all the fundamentals. And if you just want a hand-picked set of stocks in a portfolio, Alpha Picks is your bet. You hear me talk about it all the time. I'll have a Labor Day special in a couple of weeks on Alpha Picks and Seeking Alpha if you want to wait on that one. But don't wait on Trendspider. Do not wait on Trendspider. And I don't think that the sale on Seeking Alpha and Alpha Picks is going to be like a huge sale. So it's not something that you want to wait on. They typically don't do big sales like Trendspider does. They do small sales. So I don't exactly know what it is, to be honest with you. They just told me that the sale's coming up. But it's not going to be big. Guarantee it's not going to be big. I think they did an additional $10 off the last time. So, but if you have any questions, you can hit me up. The Linktree has my email address right up here on the right. When you sign up for Trendspider, what I want you to do is sign up for Trendspider, then email me through the Linktree here. Just email me a screenshot of your sign up so that I can make sure that your email address is in the program, because when I update the custom watch list and the custom scanners, you're going to want to be on those updates. So if you have any questions, hit me up. Okay. See you. Bye. Ammer, shop. And I went over this. I got out of shop at 70. So it's at 73 right now. Shop has been public for 9 years. Take a look at September and October. I mean, I think, October's behind my head. It's 33% with a mean change of minus 3%. September is 44% win rate with a minus 1.95. It doesn't matter what I think. That's the history of it. When you look at this, I saw this. And that's why I decided to get out of Shopify. I saw the lower highs or the higher lows, and I saw the lower lows right there. So that trend line is why I got out. I said the top is going to be probably 80. So I sold at 70, knowing that I still had $10 in if I went up, but I didn't want something to go down. So I panicked a little bit, decided to get out. Shopify, in my mind, it's expensive. I mean, it is expensive. I think they could kill it. And I think I love their CEO. The PE at 71. The PEG ratio at 1.52. Not horrible. The growth is just phenomenal. 23% revenue year over year. That is crazy. Leverage free cash flow, 96% year over year. Operating cash flow, 616%. That is
crazy, crazy growth. And they continue to knock it out of the park. So I don't want to say that it will never get up. But when you go to look at that valuation, that, the PE forward, 202. It's just you're paying for that top tier. And I think what the market's doing is saying, hey, that 200-day right there, it's kind of just, it's providing the resistance on the weekly. So I don't want to say that it won't get back up to these highs around 100, but I do think you have to get through 80 to get there. And I think between 76 and 80, I think that's provided pretty good resistance before. And so I got out at 70. Will I get back in? I don't know. Morning, Chris. Okay. I'm going to go because I got to go to the dentist. I'm going to leave you guys with the show exit. And it's 10 o'clock. I went a little bit longer than I thought. Okay. See you guys.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.